Good morning, traders, and happy New Year to all of you. So we start off 2016 with a trading strategy video. This Renko Trading Strategy has been published on the website, and I thought of doing a quick video to make it more easier for all of you to understand. So this Renko Trading Strategy is quite interesting. And it offers a very safe entry into the trade. The risk reward is also quite good. So the title of this trading strategy is called Trading Pullbacks with the Parabolic SAR indicator. So let's take a look at the strategy. It's very simple and uses only price action and the Parabolic SAR indicator. Now, when I mention price action, most traders might find it to be a bit difficult to understand, but in the context of price action for this trading strategy, the only thing we're implying is that the trader understands the trends as well as the Renko reversal boxes, which are visually quite simple. The strategy works best from a 10 pip fixed box size Renko chart, and you can use it as high as up to 30 pip fixed Renko boxes. Anything beyond 30, you might be seeing a bit of a choppy market, so it would be a bit risky. However, you are free to experiment and see what works best for you. The trading strategy is ideal for traders who specifically insist on a 1:2 risk reward setup. Secondly, it is very consistent in delivering the profits. And the trading strategy is most ideal for traders who prefer to take an X number of pips per day. For example, if you were looking at Euro USD, you might be thinking to yourself, okay, so I'm going to trade, make a profit of 20 pips a day, and then be done with trading for the day. So for those of you with this kind of a mindset, the Renko strategy with the Parabolic SAR is quite an interesting strategy to consider. It doesn't require too much of screen time. The only thing you need to do is to wait for the right conditions to form, and once that happens, you need to simply monitor the charts. And because we're trading the small pips, it should be relatively easy as well. So you don't really need to spend too much of screen time with this strategy. It works best on the Forex majors only, which is the Euro dollar, dollar yen, pound dollar, the US dollar and the Canadian, and the AUD USD. Some of you might be asking if you could use the strategy on gold or on other cross-currency pairs. Well, the thing is, it all depends on market volatility. So there are times when the strategy works on other currency pairs, and there are times when it doesn't. And again, you need to experiment with the cross currencies and see which Renko box size works best, and how price is moving in relation to the trends. The strategy overall is very simple and easy to understand. There's no complicated setups involved. The most important part is that the strategy is open-ended, meaning that you can customize it to your requirements. You could use it alongside an existing strategy such as moving averages, for example. So the possibilities are endless. So this is the chart setup, and basically this is what you're looking at. You have the Renko box sizes, and you have the Parabolic SAR. The sections marked with the circles are basically the pullbacks in the Renko chart. So now let's go through the strategy rules. The first step is to look at the charts, look at your screens, and understand what the prevailing trend is. You need to have an established trend in place, meaning for at least 5 or 7 Renko bars, they need to be in a steady uptrend or in a steady downtrend, with the Parabolic SAR being plotted above or below the price. Once you identify this, the next step is to wait for the trend to be broken. which would be confirmed by the parabolic SAR switching from below to above or above to below. Also note that there are times when the parabolic SAR switches because of highs or lows. That is something you need to avoid. So whenever you see any setup where the parabolic SAR switches because of a low or a high, you need to ignore the chart for a considerable period of time. We are only focused on a Renko close, which results in the parabolic SAR being switched. Now that we have a new trend being established, you need to wait for price to pull back within the current trend. Once the pullback occurs, you need to look for a reversal box on the Renko charts, which would be your signal to enter. Take a long or short position on the closing price with the stops placed either at the recent high or the recent low of the reversal box. Now the interesting bit for setting the take profit is to use the Fibonacci tool and measure the retracement level. For the fibs, you can delete pretty much all the other levels, 0.618, 0.382, 1.618, and just use 0, 100, and 200. So this is the buy setup for the parabolic SAR. As you can see, you have an established downtrend here. Prices are moving consistently lower with strong bearish Renko boxes being printed. Then you have a small uptrend being established here, and this last parabolic SAR is broken with the closing price. It's marked by the circle here. Soon enough, you have prices falling back again. However, notice that the parabolic SAR is still printing below price, indicating that price is in an uptrend. Then we have a Renko reversal box where price closes in the green, and this would be our trigger bar. So we go long on the close of this box. You set your stops to the low here, and using the Fibonacci tool, you need to retrace this move, which is nothing but 1, 2, 3, 4, 5 Renko boxes. So your take profit level would be 5 Renko boxes. Sorry, 6, considering that this is a reversal box. So that's 1, 2, 3, 4, 5. You have your entry here, 1, 2, 3, 4, 5. So this is where you would be exiting. As you can see, the strategy is quite simple to understand. Here is the sell setup again. You have prices moving in a strong uptrend, and the parabolic SAR is broken here. However, you notice that the closing prices is almost equal to the most latest PSAR level. So we wait for another close below, which happens here. And soon enough, price starts to move back higher. This is the pullback, and here you can see a Renko reversal right here. So you would be placing your short position here with the stops at the high. You again make use of the Fibonacci tool and measure the retracement, which is 1, 2, 3, 4, 5. So you've got 1, 2, 3, 4, 5, and you close your short position here for about 50 pips profit. So as you can see, the parabolic SAR pullback Renko trading strategy is quite a simple setup. It doesn't require too much of monitoring, and it's quite simple. So let's take a look at some of the most recent trades that happened. Here you've got a downtrend being established, and then you had the parabolic SAR being broken and prices closing above, and you have the pullback here now, while at the same time prices are continuing to move in an uptrend. You have a Renko reversal box here, which would signal a long entry. So you would go long at 0.701. Your stops would be placed here at the low. And using the fib tool, you measure the distance of the retracement. It gives you take profit of 0.707, which is exactly where price hit before moving lower. Let me look at another setup, this time on the Euro USD. So you've got a steady uptrend here, and prices break the Parabolic SAR here. Now this would be an interesting illustration, because this basically shows you a failed, or rather I would call it as non-optimal trading conditions, because after the Parabolic SAR was broken here, you started having a downtrend, but prices didn't really close below the PSAR. As you can see, they pulled back and then moved down strongly, and by this time, you know, it's already pretty late, and you should be looking at potential long positions, which basically price did by moving up. Another example here is a rather delayed entry, or should I say a swift move, because the moment prices close below this Parabolic SAR, you have prices falling sharply and then pulling back. So again, this is another trade setup that should be avoided at all costs, especially for those who want to maintain their fixed take profit levels for the day. Okay, GBP USD is something which has caught my attention right now. As you can see, prices are in a downtrend, and then the Parabolic SAR was broken here with the close above. So right now prices are in an uptrend, and the reversal here should signal a move to the upside. However, I'm not too convinced that price action would give me any decent move to the upside, because a reversal box here might potentially threaten the Parabolic SAR, which is moving up quite close to the lows of the prices. But anyway, GBP USD is definitely worth watching for the short term. This is there is another small short setup that occurred right here. Prices have been moving up, the Parabolic SAR has been broken right here, and you had a close here. So from here on we start monitoring the pullback, which occurred right here, and then prices closed down strongly bearish. So in this aspect, you would be looking at a very small profit, but that's profit nonetheless. This is a another potential setup which I'm looking at on the dollar yen. Sorry, this is the S&P. Yeah. So here you can see prices have been moving in a steady downtrend. And a rather prolonged downtrend actually. You have prices closing here, breaking above the Parabolic SAR. You had a pullback and a strong reversal right here. So you would be looking at this particular retracement, and we expect price action to hit 118.8 quite shortly. Notice that if you would have gone long here at 118, and your stops would be right here, and this would be a target level. Yeah, so this is your risk reward setup for the dollar yen 20 pip chart. So folks, I hope this trading strategy is quite simple to understand. If you have any questions, feel free to use the comment box and let me know. Thank you, and have a good day.